Hello, everybody. Kirk Spano, Investing 2020s, and we're going to cover some of the 24 things that will absolutely happen this year. A little review of what I said at the start of the year. A lot of this was tongue in cheek. Some of this was pretty well informed, but let's go through it. First off, Bitcoin predicted to get to 100,000 with ETF approvals. I think we're on our way. Stock market unlikely to experience a crash. So far, so good. Small caps set to outperform the S&P 500. There won't be a recession in 2024. Rather, we will see the soft landing. Seems like that's what's going on. And commercial real estate will only result in a mini banking crisis that the Fed fixes pretty quickly with rate cuts and dialing down QT. Well, they've already started to dial down QT, and it looks like, based on the futures, it looks like rate cuts are expected by the market at a 100% probability for September. Bitcoin, 100,000. I think we're on our way. There won't be a stock market crash. Seems about right. S&P 500 will gain over 20%. Certainly seems like it. Magnificent 7 are still almost magnificent. Pretty good. Small caps will beat the S&P 500. Does not look like that will happen, but there are still great small cap stocks. And I never told you to buy the index anyway. I said buy a dozen small caps. Emerging markets have an up year. They are, but it's not great. U.S. economy has a soft landing. Bingo. Commercial real estate will not cause a crisis. So far, so good. Inflation will moderate to below 3%. Just happened. Full employment continues. Yep. AI cures a disease. Yeah. Have you been paying attention to that? AI has come up with several treatments for several things that look like they're going to border on either incredibly much better treatments or cures. More people accept climate change is real. That one was a layup. More people do accept it. Might not be enough, but they do. EVs will surpass 10% of new car sales in the US. Just hit that. Big tech buys Paramount Global. Kinda. I don't know. Skydance is using Oracle money. Big Daddy Warbucks Ellison. I don't know. I'll take a halfie on that one. China will not invade Taiwan. So far, so good. The Israel Hamas war will not spill over. We'll see. Mexico gets its first female president. Happened. India will continue to ascend under Prime Minister Modi. Have you seen their market? Yes, they're doing it. Putin will be out of power. That guy's got more lives than most cats. So we'll see. Ukraine conflict winds down going into this coming winter. We'll see. We'll see what happens at the end of the year. Donald Trump will not become president. Who knows? Joe Biden will not continue to be president. I said that he would step down. And somebody asked me how I knew that. And so you've heard me say my little birdies a number of times. So little birdies is my way of saying channel checks. So my channel checks, when I talk to people who know stuff about what they're thinking, I just call them my little birdies. And, it's not insider information. It's just information. And I'm, lucky enough to be able to ask a lot of smart people questions. And sometimes I ask good questions. Sometimes I ask bad questions. But last holiday season, I got to meet with a whole bunch of people in both political parties, really, in Wisconsin, who are pretty tight. Union guys, the organizers, people who elected politicians and their staff. So that's the only reason I really go to holiday parties, because I just I'm not real big for that stuff anymore. I used to be a big party guy, and I have noticed at 54 years old that not so much anymore. In any case, I got to talk to some people, and it became clear to me that plan A was hopefully Joe Biden's popularity goes up and nobody thinks of him as old. Plan B was, if his popularity doesn't go up, because it was already in the dumps a year ago, and if he seems old and it looks like he's going to lose, we have to replace him. So I've pretty much been on board with the Democrats would end up with a female presidential candidate. And I've always known that Kamala was the most likely choice because she's the VP. But I thought they might flip to Gretchen Whitmer, or that Michelle Obama would say that she wants to do it. If Michelle Obama ever said she wanted to be president, and this might be her last chance, I think she could have done it. I don't see her doing it in 8 years, so, or even 4 years. The pick that I had was Gretchen Whitmer. It's going to be Kamala Harris. Looks like everybody's lining up behind her, and Whitmer could be on the ticket. I think that Josh Shapiro is potential, and then you have a couple of other governors, and then the senator from Arizona. I forget his name, but we'll see who she picks. It looks like the roll call vote, will be August 1st. And somebody says Kelly from Arizona. And on August 1st, they're going to do the roll call vote to nominate her. And then the convention will be a 4-day pep rally. So it looks like this will be official on August 1st, and she will pick her running mate probably that week, right afterwards. And my guess is if Josh Shapiro wants to be on the ticket, and I'm not sure that he does. I mean, he might think that he's better off in 2028, but the problem is if Kamala wins and she has a VP, then that VP jumps ahead of him. So I don't know how you do that political career math. But I think Josh Shapiro is the one who makes the most sense because he's super popular in Pennsylvania. And then that would pretty much roll the Midwest states to the Democrats. So if you take a look at the map right now it's polling out at 251 votes for Donald Trump, 226 for Kamala, and this is really the lag for Joe Biden. It looks like Kamala is going to pull 2 or 3 points better across the board because of a lot of people just didn't want to jump on the Biden train, but you're going to see the Democratic base pretty mobilized now, which the problem was is it didn't look like that was going to happen. So I just want to show you something. If the Democrats get Pennsylvania, Michigan, and Wisconsin is probably the least likely of the three, that's 270 electoral votes right there, and Kamala is your next president. I think that's all going to happen. I also think you see Arizona, and here's why Kelly might be the choice, because I think they probably get these three anyway just by having those governors out there. And then if you throw in Kelly, if the Democrats can get Arizona, then Wisconsin is less important, right? And they still have 271. So depending on who she picks as a running mate is a big deal. It's always nice to get Nevada, but it really doesn't matter, right? If suddenly you get Nevada, but you lose Wisconsin and Arizona, you lose. Here's the other big one, Georgia. Georgia puts the Democrats over too. So what you can see is there's a lot of ways to win for the Democrats if they get Pennsylvania. That's why I think Josh Shapiro, if he wants it, is the guy, because just getting Pennsylvania, right? Just getting Pennsylvania gets the Democrats to 245, getting Michigan 260, and then all you have to do is get Georgia, Wisconsin, or Arizona. Now, let's say that didn't happen. Let's say that went red. And I think Michigan and Wisconsin go the same way. Whatever happens, I think they go the same way. So now all of a sudden it's 260. And now it comes down to Georgia and Arizona, and that's enough. So weirdly, there's not really any scenario where Nevada is the tipping point. So I don't know that they're super important when it comes to the campaign as far as electoral votes, because there's only 6, and with all the retirees there, it's gone a little bit more red. It used to be pretty solidly blue. I think Arizona has been moving more blue with people from California moving there and immigration. I think there's been 4 million people naturalized in the last 3 years, so that is clearly in the Democrats' favor. And I think Georgia, I really think that that's in play. Nobody thought it was last time, and I think that it is certainly in play. So I don't know if it's, you can never say it's solidly Democrat, but I think you can say it's a toss-up. So it's interesting the way this all plays out. But if Josh Shapiro is on the ticket, Pennsylvania goes to the Democrats. And then all of a sudden, you've got 1, 2, 3, 4 important states here, and the Democrats have to get any two of them, and then they win. So whether it's Michigan, Wisconsin, that gets them to 270, Michigan, Arizona. I guess the one combination would be Wisconsin, Arizona, Nevada. So if the Democrats wouldn't get Michigan or Georgia, but they got Wisconsin and Arizona, that would be your one, that combination right there. So that's I guess Nevada's kind of an insurance policy if it's just an outside sort of thing that happens. But I do think Josh Shapiro makes the most sense because Pennsylvania at 19 electoral votes, clearly the most important of the swing states. We'll see what happens. Did I have anything else important on here? Oh, Brewers win the World Series. If the Brewers trade, here's the trade. If the Brewers trade for Isaac Paredes and Zach Eflin from the Tampa Bay Rays, then I think that this has a chance to happen. So we'll see. Everybody thought the Brewers were going to stink, but the reality is they have a ton of young talent. They added Rhys Hoskins. William Contreras is way better than people think. The kid they got in the Corbin Burns deal, Joey Ortiz, legitimate major league infielder. So all of a sudden, the Brewers really have no big holes. They could use one more guy in the lineup, and they need another starting pitcher, but everybody needs another starting pitcher, so we'll see what happens. All right, punch card dividend stocks up at both websites. So let's go through this real quick. I changed the format of the article to be much more actionable and much more tied to what I do at my investment firm. So I had this huge universe of stocks, and then the punch card stocks grew from about a dozen to about 20 to about 30. I'm not really looking to invest in all those companies. So I changed this to be only the companies I'm invested in and companies that I'm looking to invest in this quarter. So what are the dividend stocks that I own right now? In both growth accounts and retiree accounts, I own Permian Resources, Pfizer, Ford, Innovative Industrial, and Coterra Energy. And we have covered why. I put some pretty extensive notes in here. And then these are the companies that I'm looking to invest in. So I have a REIT basket. I'm looking to invest in all of these REITs. I give my reasons here why each one. Vici is the one that I was going to take off, but I did a lot of reading. I spent 2 days reading like everything Vici. I read about all their deals going back for the last 5, 6, 7 years. And here's what I can tell you about Vici. Their free cash flow yield covers the dividend. So they don't have any problem with that. And they have a lot of real estate that is what I would consider non-core that they can sell. So they don't really have any problem with keeping their free cash flow high enough to pay the dividend. I don't think that that's a threat. The growth could slow down because their cash cow are the casinos. And the casinos have paid 100% of their rents even during COVID. So you're really taking a look at a company that the casinos are the backbone and they're expanding in other things. And I looked at some of their deals, experiential real estate, hotels and Bolero. They bought Bolero. And I know bowling. I used to be a pretty serious bowler. And I know a lot of people that still are, and people who run bowling alleys and play on, the amateur tour, and a couple that have flirted with the professional tour. So, pretty good bowling roots in Milwaukee. I think we used to have the American Bowling Congress headquarters here. And I took a look at the Bolero deal. I was like, why did they buy 38 bowling alleys? One of them's right down the street from me, about 5 miles away. So I went and I was like, why? And because it's kind of a divey place, but it's $6 a beer and $20 for nachos. I was like, oh, they probably make money here. So some of the family-owned bowling alleys in the area charge half, but those families make hundreds of thousands of dollars. And I was like, yeah, but this is a $35 billion company or whatever it is. And why 38 bowling alleys that maybe make $1 million or $2 million each? And then I took a look at the real estate and I Google Earth over 20 of their properties. And I was like, oh, so like the one in Milwaukee is right next door to a car dealership on the south side. And then on the east side is a park. And then to the north is like 3 lots that could all be torn down. So I was like, oh man, they could have a huge property here on a side of town that if it redevelops could be super popular. And in the notes about that deal, they said, we expanded to 7 jurisdictions that don't have gambling for us yet. So I think what Caesars is doing here, or what Vici is doing, the old Caesars, what Vici is doing here is they're like, if gambling expands to these states, especially in the next several years, or if they at least allow online gaming, they can take these properties and turn them into something. I think ultimately they sell off Bolero. I don't know that I don't think the business is all that great. But here's the thing: what they paid, which was like $400 million or something, and then they did a lease back at like $30 million a year, and with appreciation, they end up owning all this real estate in 10 years paid for because they're all triple net leases. So I guess if we as individuals could buy real estate and really have nothing to do and know that, hey, in 10 years it's all paid for, now I can do what I want with it. I can flip it, I can develop, I can do whatever I want. It's a pretty good long play. So I took a look at everything that Vici did. I really dove into that one because I was not understanding what they were thinking. And here's what they are thinking: in 10 years, they're going to own a lot of real estate that they can either sell or redevelop, and at least some of those properties will be able to add gambling, which is the cash cow. So we'll see. I like Vici suddenly a lot more than I did. It's close to being in the buy zone. I did put buy below, and we're going to take a look at a screener here in a second. All right, so high yield stocks. The only one I own right now is Bristol Myers. This could end up in the dividend growth relatively soon once they start raising their dividend again. The other high yield stocks that I've owned some of these in the past, and I'm going to try to own them again: Kinder Morgan, Williams, and Enterprise Product Partners in the midstream basket. They've all rallied lately, so you need to get a breather. If third quarter volatility happens the way that it has historically in election years, then we should get a shot at these. And then these 3 utilities. And I think the utilities are pretty attractive. So Algonquin, I added back. So these are the guys that owned Atlantica, and they sold Atlantica off, and they used that money to help their balance sheet. One of the things that I thought was interesting, because back when they sold off Atlantica, I said, the winner here isn't Atlantica, the winner is Algonquin. So Starboard Investments has taken a huge position in Algonquin. So I'm going to be adding Algonquin, I think, this week, if not right after this call. And, Starboard Investments, what if I told you about private equity? They are almost always the smartest guys in the room, and they're sharks. So I don't care if Algonquin still exists as a company in 5 years. If they can get the share price to double or triple, which is their MO, I'm interested. So I think that Algonquin, because they sold off Atlantica, they were able to pay down debt, and now Starboard's in there saying, okay, either we're going to get you sold, or we're going to merge somebody with you, or we're going to sell a non-core piece. They're going to figure out a way to make their share price go higher. In the meantime, you have a 7% yield. So I think this is a pretty sweet deal. I think the risk is pretty much wrung out of it at the current share price. So I am full-throatedly telling you to buy Algonquin if you're a retiree investor. And I actually think if you are a position trader and a growth investor, this is one that you can say, okay, I'm going to buy this, look to double or triple my money in the next few years, and I'm cool with that. Wisconsin Electric, the story continues to be American Transmission. It's a very well-run company, always has been, and they have been chopping along for a few years now because of the higher interest rates. They have a backlog on rebuilding the grid that's like it's literally like a 10-year backlog. They're never going to be short on business in the next decade. So what they're doing is they're building the grid, they're expanding it, they're helping with the electrification of the economy. This is one of the very best companies in America to be able to own, to have a piece of that. They pay a fat dividend. It's up around 4% right now. Anytime it gets to around 4%, you should probably buy it, because the stock price goes up, and the effective yield goes down for new investors. So right now is a pretty good time to buy Wisconsin Electric. WEC is what they call it now. The local brand here is Wienergies, We Energies. We call it Wienergies, sausage community. American Transmission, though, is the hidden gem in there, and nobody pays attention to it, but you really, really should. It's a part of the company that's not valued, not as much as it should be. I think some people know, but I don't think most people know. Most most utility investors don't get it. They just like, oh, look, somebody else has a 5% yield. I'm going to buy that one. These are the guys. Take a look at their charts. I got rid of Clearway Energy. The only yield co that I am interested in now is Brookfield Renewable, and there's a couple of reasons. The yield co model, which we identified years ago as having a structural problem, they've just never overcome the fact that having one sponsor really binds you to kind of related party transactions that aren't always in your favor. So with Clearway, it just seems like they're never going to get great deals. And I took a look at the capital structures. Brookfield Renewable being backed by Brookfield Asset Management, more money than anybody would ever need in a zillion corporate lifetimes. And I think that the hydropower, which is Brookfield Renewable's base, is hydropower. They ain't going anywhere, right? Dams. So they own tons of hydropower. That gives them a massive investment advantage over everybody else because they have that easy revenue that supports the whole operation. They can make very strategic purchases and deals with a wide variety of utilities that are looking to sell or finance an asset. So Brookfield operates a lot like a private equity fund through Brookfield Renewable Energy. And I think this is the only one that I'm interested in. Maybe there's a couple other ones out there, but I think they're generally owned by private equity. So similar companies generally are private equity firms, which is why, I talked about KKR a couple of years ago and Blackstone a couple of years ago. They've all run up. We should have piled into those. This is, I think, an opportunity to get a big fat yield and to have a private equity style investor on your side who cherry picks the good deals around the country. All right, so take a look at this. Understand that I've made this basically completely based on what I'm doing at my firm now. And if you want other things to take a look at, go on over to the very short lists and you can take a look at everything that we're covering. Remember, I do a 5-year price target on everything. And then we have a column that shows what the potential gain is over 5 years if it would get to the 5-year price target. And it tells you, hey, not much gain. If it's red, it means it's pretty much fully valued for the next 5 years. And then it tells you what else is out there. And if I think you can double your money or more, I've told it to highlight it. So I think Algonquin, you can double your money. I think that Bristol Myers, you can double your money. I'm going to take a look at CF. I've invested in CF in the past, so I'm going to make sure that that's right. Katera, we own. We've been buying that lately. Dell, I won't want. Ford, what else? Nutrien, we should talk about Nutrien. So the fertilizer companies are what we should be looking at maybe for next quarter. Maybe we should look at them now. I'll do a little deeper dive. I just run all the time. But to see both of the fertilizer companies that I think are best to breed, both saying they can double in the next 5 years, that's interesting. So the dividend at CF is 2%, but Nutrien's a lot higher, almost 4%. So Nutrien's interesting. We more than doubled our money on this last time we were in it. So let's take a look at Nutrien again. I mumbled it a couple times lately. Stag is one of the REITs that I'm looking at. I need to dig into this business more, right? Molson Coors. I wonder if this is right. So I'll take a look at that one too. If I put something in italics, it means I'm usually looking at it. It's to remind me to do the work because, I have a shortage of work. So I'm going to take a look at some of these. And we got the growth stocks. I've been building the international, cover all the mega caps. Here's something interesting about the mega caps. There is like no mega caps that are projecting out for big gains over the next 5 years. None. They've all just run up so much. There's like nothing that can double. Disney, maybe. I'm trigger shy on streaming after getting my butt kicked on Paramount and Warner Brothers. But I do think that Disney is the interesting one there, right? If they decide to really make Hulu the cable replacement and maybe they get Warner Brothers to merge in with them, which would make sense, right? And then all the Warner characters can be at Disney, I don't know. Warner still sounds like it's going to Comcast, so we'll see. I mean, Zaslav has sucked as much money out as he can, so it's probably time for him to take his golden parachute. I mean, Disney's interesting, and it's close. Oh man, what is that price? Just has dove over the last 3 months. down to 93. Every time that we don't buy it down in the 80s or 90s, we regret it, right? Intel looks like it can triple. Should get Pfizer here. Pfizer here. I think that one can triple, double to triple. But the mega caps are just not where the big gains are. So those are almost all index correlated at this point, with a handful of exceptions, which means you probably don't want to own the indexes. You don't want the S&P 500 for sure. But you might want QQQ if you can trade it effectively. I do not own QQQ really right now, a little bit in the 401k plan, but I am looking for a pullback on QQQ to anywhere from 455 all the way down to about 400. So if you take a look at QQQ, you can see that the Elliott wave is saying there's a couple different levels. So lower to middle 400s, 400, even lower. Let's take a look at this chart though. Let's go back a while. So here's the correction off of COVID. Let's say it gets back down into here, then rises and goes back down. What is that? It looks to me like QQQ is forming a giant head and shoulders. Doesn't mean that's what is going to happen, but in the way I see the rest of the decade, it makes sense to me. So if this ends up being a giant head and shoulders, you're going to get really neat 1 to 3 year periods to trade this market sequentially before it breaks out in the next decade again. We'll see. I could just really see a 5-6 year choppy period with these mega caps, because they're just kind of overvalued across the board. They're at that third standard deviation level for their valuations, and that really screams write some covered calls on a lot of stuff. So we'll take a look at my list of stocks. One of the ones that people have been asking me about is, should I write a covered call or sell some AST Space Mobile? And this entirely depends on how much you own and what its role is in your portfolio. Now, I'm not selling any covered calls on AST Space Mobile, but based on the 1 week RSI, you certainly could. So if you take a look at that chart, right, it came down for a very long period, chopped all the way down, and then it jumped up. And why did it jump up? Right, most of you know this. The launches of their 5 satellites is going to happen imminently. So it's scheduled for August. We're not sure if the rocket is going to be cleared by then. So sometime this fall, and maybe as soon as August, the window opens, I think, at the end of August, and then it runs through the middle of September, and then there's another one a little after that. I think they're supposed to take the rocket that just blew up from Tesla. So, that's bad, but or from SpaceX. So you could see just a little pullback. And if they can't launch on time, maybe a little bit lower. For me, I'm just willing to live with the choppiness. I'm not going to try to game this. I think that AST Space Mobile, take a look at American Tower, which we've talked about this comparison before. American Tower, which invested in AST Space Mobile, is almost $100 billion company. AST Space Mobile is a $3.5 billion company. AST Space Mobile is going to be able to have 5G coverage of the entire planet like the next 3 or 4 years, whereas American Tower is in like 30 countries. Why couldn't AST Space Mobile get to be at least a 30, 40, $50 billion company, right? So I think from here, it's still a potential 10 to 30 bagger, right? I don't know if it can really replace a lot of the American Tower stuff, but when you understand that there aren't towers in dozens and dozens of countries, and they are operating off of 3G standards, if they can get 4G 5G from a satellite, suddenly their customer base it ends up being a couple billion people by all the estimates. So I think AST Space Mobile probably ends up on the S&P 500 before the end of the decade, which means that it's got to get well over $20 billion of market cap. I think it ends up well over 30 billion. And it's just a matter of how high and how long does it take. So I don't want to write a covered call here because I just want to keep my shares. I've only invested about 3 or 4% of my capital. Now, it's a bigger percentage of my portfolio now because it, went straight up. And we loaded up in here, right? I wrote the article, I talked about it. We collected some premiums on selling puts. Some of the puts got assigned, and suddenly it does that. And people are like, oh, look, I doubled my money. it's the tip of the iceberg with these guys, folks. And they can have wild volatility. I don't think it's predictable though, right? We don't know when the launches go. We don't know when interest rates get cut. We don't know when another big, we don't know when T-Mobile switches from SpaceX to AST Space Mobile, and I think they're going to. I think that's going to be a headline that you see later this year. So it's important. Remember, SpaceX got bad news about trying to copy them. SpaceX just doesn't have the technology, and the government told them, hey, you can't launch a zillion satellites. Just ain't gonna happen that way. I don't know that even changes if Trump wins. I know that Elon Musk is trying to buy favor with Trump, but I think that's because he sees the handwriting on the wall. All right, so go back to the screening. If we flip this over, there's a bunch of stocks in here. Like, I would like to buy Kinder Morgan on a dip below 19. It's been on a rally, but the oscillator just flipped to neutral, so we might be getting a correction soon. You could write a covered call on Kinder Morgan if you still own it. There's not usually a lot of premium there, so I don't generally cover it. Williams is another company that I'd be willing to invest in at the right price. Essential Properties Trust is in our REIT list, and it really rallied, but it's on a sell signal now, which means you could write a covered call. I don't know if there's much of a market. So some of these I'm looking to come back. Stag, Industrial, Palantir. Here's one that I suggested that you could write a covered call on last week. So here's the thing with Palantir. It is not as fast moving as people think. So this has been a great rally, and we were smart to invest in here. So the question becomes, can this just keep chopping up? And its valuation is stretched. I think that the growth numbers have shown that they're slowing down just a little bit. They are still stacking up recurring revenue, so that's good. It's a subscription model. I just think that this big rally here is almost done. Could it go up to 35? Yeah, so the covered call that I suggested the other day was the September 35. If you're not using chat room over at Fundamental Trends or the chat room here, the options. So I put the same post in both places. It said Palantir is overbought on a weekly and a monthly. Has pretty heavy resistance at about 35. So if you wanted to sell the September 35 calls, and if you can get over $1, I think that's a pretty good deal. I talked about that in both chat rooms, both services. I really do encourage you to get into the chat more. So September 35. So it dropped a little bit. It's only 72 cents now. You could try to write the 34s. I wouldn't really go much lower than that. They're not even getting anything for that. Get more for the 35s. Oh, these are cash secured. That's why I think that didn't look right. All right, so covered call. Aha! So let's go to the 35s. 90 cents. 34s, get $1. I'd stick with the 35s and try to let volatility get you over $1. Really, you want to get at least 3% because that's kind of like building your own dividend. So maybe $1.10, $1.20. Those would both be pretty good. So take a look at that. Somebody says we need more people in chat. Yeah, I don't know why you're not using these great chat rooms. I mean, the one at Margin of Safety is spectacular. I have multiple rooms. And then over here, we have 4 rooms. Rare swing trading. That's all the people who do some swing trading. Option selling for retirement income. I renamed it. Just that's what it is. The macro special reports and videos are here. And then all the stocks and ETFs are in here. So great rooms. They've been active too. Active in the last hour or two. So what else should we be looking at? Let's flip this over. What is super oversold? Ginkgo Bioworks probably deserves it. Solar Edge, I think, is going to be interesting, and maybe the oscillator just flipped to a buy signal and it's super oversold. The problem with Solar Edge is that it's Israeli, and I'm not so sure I have my head wrapped around their ability to grow at the moment. And I do think they need to dilute because they haven't been profitable for a while. And they were profitable, and then they haven't been for the last couple of years, which is weird, right? Under the Biden administration, you would have thought that clean energy through the roof, but no, they've taken a very practical approach. They talk it up, but if you take a look at the tax credits for solar, for selling your solar back into the grid, the price of that has come way down. That is at the state level. There isn't a tax credit for selling into the grid. So, I think that we're going to see a change in policy someday to support it a little bit more. We do need an all of the above energy strategy, or energy gets expensive in about 3, 4, 5 years. So we'll see. Solar Edge, I think, is bottoming out. I'm not ready to put it back into my potential buy. Right now, I just get it through TAN. They're worried that this company can go under. I mean, the market, this is what the market is saying, this might go to, almost nothing. I don't know. I think that's overstating it, but we'll see. So I'll do a little bit more work on Solar Edge. I'm not ready to be there yet. Unity, though, is one that I already own, and I've been waiting a super long time to add to it. I do think, and I had a target price. Look at that. I had a target price and it got hit. Man, that's pretty nifty there. I am going to remove that. I think that if we switch this to a daily chart, right, this is the beauty of trading view. Now we can take a look at it at the shorter term time frame. There are people who clearly there are people in the market who are projecting it to go to nothing. I think that is just traders being traders and ganging up on it. This right here to me looks like a cup. It looks to me like it's about done. Going down. They're into their new management. They're into their, rationalizing the business. I'm going to sell a cash secured put here to defray my costs because I am down like 50%. And I think I'm going to sell the September 15, which will get me about 9% for 2 months. And if it gets put to me at 15, my net cost is under 14. I can live with that. I'm happy to scale in and average down with a net cost under 14. So this is the one I'm going to sell. I'm going to sell the September Unity 15. I'll probably do that today. So we can go through here. SunPower, at the start of the year, we said, this one might be done. And in fact, it looks like Total is going to take them private. It'll still be called SunPower as a brand name, I think. However, Total, I think, is going to own it in whole because they own most of the debt. They consolidated the debt under Total back in January when I warned. And yeah, the stock is down even more. So, we had bought this years ago and we rode it way up and we sold some, trimmed it. We haven't owned much of it since it was around 20. And you're just gonna have to take the loss on this one if you still own it. I mean, I hope you sold it all the times I wasn't real sure about it. So at this point, it's not so much that Daddy Warbucks Total is going to save it for you. They're going to save it for them. So SunPower is going to go private, and it's just a matter of, do they go through a bankruptcy? How do they do it? But that's what's coming. Disney, again, super oversold. So we should look at Disney. In my head, I have to not think of it exclusively as a streamer. I got to remember those parks are super profitable and everybody loves them. However, into a recession, they probably don't do well. So I don't know. Maybe I won't buy them here. I just have had a hard time watching the Disney stock over the years. I mean, it's really been, right, for what Disney is, isn't this disappointing? I mean, take a look. It's been forever. It's been a decade since this thing has gone up. I mean, it's been volatile. It's been a decade. So the rationale behind why you would buy Disney isn't that you keep it forever. It's that you would just ride up the next rally and then sell it. So this could be a really good position trade over the next year or two. Is it one of my best 30 position trades? I don't know. I don't think so. But if you were so inclined, if you wanted to be in the house of Mickey Mouse, I think you could be looking at it right here, right where that line is. It's a pretty good support line. You had a 618 level off of this move. So we're about at a buy if it's going to rally. The question is, does it get back up to this red line? If it does, it's a pretty good trade. I'm not really sure. I don't know what the time frame is on these streamers doing all the right things. I mean, there are right things out there for them to do, and they just haven't done them. Go on down. Alba Marley, if you want lithium, I just own the lithium ETF. But this one is pretty well priced. I mean, that is a heck of a collapse. So that's a commodity collapse, right? Round trips, which is not atypical of commodities. So I think that this is one that probably just about at the bottom, and you could probably accumulate this if you wanted. The problem is it's still a $90 stock. So, I mean, it's not that it can't go further down. I mean, it can go further down. It can just ride this red line. We'll see. Like I said, I'm just starting to scale into the lithium ETF. Change this to the weekly because because that's more important to me. Right, there you go. So this can come lower. So I don't have a big position yet. I just have a starter. This, that right there, that it is kind of at a support level right now, roughly. So maybe this is it. Maybe it's done. Maybe it chops and then starts going back up. Again, we'll see. I think November will kind of matter. And remember, Uncle Elon is trying to buy favor with both parties. It's not just the Republicans he's courting right now. They're new, right? He still has fanboys on the left. So he's just trying to expand his universe and do what a good businessman does and maximize his market. That's the nicest way I can put any of that. But look at that. I mean, that's just, man, that is just, it's negative, right? It's going down, but it's a good chart. I mean, it's a pretty understandable chart. And now you can see that it's starting to form a cup. Doesn't mean it can't fall them big time, but like I said, I started to scale it. Go through here. Coals I keep track of. Here's a CF and Nutrient again. So not quite oversold, but close. Rio Tinto, interesting. Anybody really want to buy an airline anymore? Starbucks just got an activist investor. It might have been Starboard. I don't remember. Interesting stuff, right? 3D companies. I told you I'm studying them again. I'm not compelled, but I do think there's a future in 3D. I don't know when that future starts. So weirdly, Marathon Petroleum. So they must be on some sort of a correction. Let's take a look, because that's a good company. So the market thinks it can still have an even deeper correction. What does Kirky think? Remember, I was buying the predecessor companies way back in here. I was buying Tesoro, and what was Tesoro? Who did they merge with? Whoever it was. Anyway, and Marathon bought them all. That's a heck of a rally for a refiner, right? Refiners really aren't built to do that. So I would expect it to continue correcting just to close the valuation gap. And remember, there's some problems in refining. One of them is that feedstock is over time gets more expensive in most cases. The upgrades are expensive. The environmental regulations are expensive. And at some point, here's another one of my things that will happen in the future. Why? Because it makes sense. At some point, we regulate plastic more, right? So single-use plastic bottles, I don't know why they exist on a mass scale. I don't know why they're sold in stadiums. I don't know, right? Why wouldn't a Major League Baseball team or football team or basketball team, why wouldn't they have something that you refill that has their logo all over it and then you carry it around town, right? So I think you're going to see a lot of single-use plastic go away over the next decade. I think that movement has already started, right? It's happening in some places, happening in Europe. And these companies make a ton of money on that. And the easy way to get rid of it across society is to put a recycling tax on the plastic and say, look, this is how much recycling costs. That's getting paid for day one. And that money will go into recycling. So if you're going to buy a bottle of water for $2, which is dumb, or $3 or $5, we're going to put a 72-cent tax on that because that's what it's going to cost to recycle that bottle, so it doesn't end up in the ocean killing animals and disrupting the food chain, which is what it's doing, and ending up having microparticles of plastic in our bodies, which we all have now. So I think that the refiners over time get hurt by the reduction in plastic use. They're all spending as if there's going to be more plastic use. I think they're wrong. So I don't know how long that takes for that to play out, probably 10 to 20 years. But I think that means that rallies like this are pretty much done. I think you see Marathon probably chop for a very long time. That's what I think. I could be wrong. I've been wrong before. Ask my ex-wife. All right, let's call it a day. Any questions about anything that you own that you'd like me to take a look at? Oregon has a bill, 10 cents per bottle. Yeah, I think that's going to be all over the place. I think recycling fees on single-use plastic are coming. I think it's a smart tax. It means that we don't have to raise the income tax. And I'm not a raise the income tax guy. I don't think we need to raise the income tax. I just think we need to close the loopholes on everybody making over $1 million a year, and corporations that are making over maybe $1 billion a year. Yeah, I use green bags for my dog's poo poo. I paid the extra $6 per 1,000. I think the rolls are 50 bags a roll. Get 20. I don't know. I get a box this big. Thoughts on EQT? Not my favorite natural gas company. Know all about them. I know they're big. Yeah, I mean, I don't think that these down targets have a lot of validity. I don't think there's much downside in EQT. So if you just want a proxy for natural gas, I guess you could do it. I like Katera way better. I think there's a few others that have more upside. But from the standpoint of really not much downside, EQT certainly doesn't have much downside. I hope that helps you. I don't think I would sell a covered call on IIPR. I don't want to lose this stock. That I just do not ever want to lose this stock, right? We bought it right near the bottom. I think it has a lot of upside to go. I think it's going to get to 200. I think, look at how small these moves are, right? I don't think you want to mess with this. I think you're going to be too cute. I mean, you could take a look at this. This is the weekly. What about the monthly though? I guess. I mean, you're going to have to be pretty nimble on this one. If you really want to trade this, you're going to have to be pretty nimble. I don't think this company is anywhere near being overvalued. You know, this one says up to 150. This band up here, which is the one that I usually think ends up being correct if the fundamentals support it. I think this is a hard stock to sell a covered call on. So you'd have to go really far out on price. So you'd want a really high strike price. I wouldn't sell, I'd be looking way up at like 140. So the September 140, you can get a $1.90 for. You're adding a $1.90 to $100 and some dollar stock. It's 1%. It's not usually something I would do, but if you're grinding, right? If you are nimble and you're grinding, go ahead. I would sell way up at 140. Because I think this stock can move $10 to $20 on any kind of good news, right? Any kind of good news, it can move $10 to $20 quick. So I wouldn't be messing with it too much. Yeah. So has anybody written anything about these guys? I don't know who either one of these people are, but yeah, 3 articles in the last month. So Stone Fox Capital, he is okay. He's not great, but he's okay. He's a CPA. Here's the problem with CPAs in investing. They see now. They don't see the future. And that's just a stereotype. But in most cases, CPAs are very now focused, the opposite of Luke Skywalker. So I try to keep my eye on the horizon. And that worked out for Luke. But I don't know. I think that Lithium Americas, right, they have a lot of process to go through, but it's hard to not see this being a $3 billion-ish company by the end of the decade. So, and it could be much higher. So, 500%. If I told you today you're gonna make 500% by the end of the decade, would you be okay with that? So yeah, I've got a starter position in Lithium Americas, and I probably will add to it at some point. But I mainly am investing in lit to get broad exposure. Over the last year, you can see that it's become range bound over the last 5-6 months. That's usually emblematic of a stabilization. And remember, ETFs are self-correcting, right? They systematically get rid of losers and add the winners, which is kind of what you want to do. That is really the main reason ETFs do well, is they systematically get rid of losers and add winners. They don't average down. So a lot to be thought through there, a lot to think about there, right? So while it makes sense to average down if you really believe in a company and it's dropped 20, 30, 40, 50%, then you can average down because it affects your cost basis and enough time has elapsed so that maybe you're closer to the execution working out. But the other thing to do is you pyramid up. And most ETFs pyramid up, right? They add to the top stocks that are doing the best, and it works. So wrap your head around that, is that pyramiding up, once something starts to work, is usually a pretty good strategy. So these guys own Albemarle, Tesla, TDK, BYD, Mineral Resources. Yeah, so this basket plus Lithium Americas, I think becomes pretty compelling, right? Because you get broad exposure, including the leader, and then you get Lithium Americas, which seems like it has massive upside. All right, let's call it a day. I think that's it for the questions. We have an interesting thought in the chat about how seltzers can be low calorie and get you high. So big area of growth for the weed industry. The thing with innovative is that, yes, the cannabis industry, got the hype cycle, came down. I mean, take a look at some of these charts over the last 6-7 years. They really look like the Gartner hype cycle charts, right? So now you're probably just going to get a long period of growth and adoption with cannabis industry maturing. Eventually they legalize more of the finances. They've already basically made it not a federal crime to possess. So you're taking a look at just an adoption curve. And I'll tell you, more and more people that I talk to are like, yeah, I don't really drink anymore because it's bad for you, but I still want to party a little bit. So, I'll have an edible or, do the puff puff pass. And just is what it is. And most people would rather, smoke something grown indoors that they know is organic essentially, or at least not potentially poisoned. And that's what they do. So I don't really partake. I've never liked smoking anything. And I think that the growth here, though, and this is why I'm not into Molson Coors, even though the price looks right, is I think that the secular trend is going to stay against drinking rest of my life, and wine will do okay. But I think hard liquor and beer are iffy and at best. And for sure, the millennials are using cannabis a little bit more, and Gen Z for sure. And we'll see about the generation after them. I'm hoping they're just a clean generation that doesn't go nuts. So we'll see. But I do think that this one is clearly, if you don't like the way that chart is shaping up, I don't know what you like. All right, now let's call it a day. I remember the back door here. Nope, not yet. Remember, the back door here is that they have the expertise to grow vegetables inside. And if climate change gets worse for outdoor vegetables, these guys can be a big winner here. I actually think that I would like to find a local company that's doing this. And 10 years ago, there were a couple startups and, just haven't worked out financially. I do think that growing indoor produce is going to happen eventually. I just don't know when, which is why it's not quite investable now. But I do think that these guys have another growth phase at some point. So adoption and then more growth when we have to grow vegetables indoors. All right, that was it. Yeah, no, that was really it. All right, have a great day. I have 3 videos to edit, including the interview with Bhavneesh Sharman on AI and biotech. Have a fantastic day.